Hey guys, how's it going? My name is Hamish and we are back with another episode of the YouTube Stock Portfolio. This is episode 9. Yep, we're up to 9 and today we're going to be looking at management integrity. So a key part of investing, of course, is looking at the management team, and we need to see that the management team has skill and integrity. And I've talked a lot about the skill component. How effectively are they investing their money? How effectively are they managing their debt? But we've never really talked about the integrity side of it, making sure that the people in charge of this business, that their values are aligned with ours as an investor. So that's what we're going to be talking about in today's video. I hope you enjoyed this one, guys. And without further ado, let's jump over to my laptop and I'll show you exactly how we determine whether a management team has integrity. All right, guys. So in this episode, it's going to be a little bit different than the other episodes. There's not going to be much numbers. It's just going to be sort of me explaining some of the different areas that I look at and how to find them on Google. And essentially, there's 5 main things that I look for in order to determine management integrity. However, there are many other different ways that you can do this. Determining the management's integrity is a very, very subjective thing. It's kind of like the part of the analysis where you're working out whether or not you can completely understand the business, whether it's in your circle of competence. And even the qualitative mode section of your analysis, where you're just looking at the business and you're trying to identify if there's some kind of quality there, that's all very subjective, and this is also very subjective. So the most important part here is that you do as much research as possible, learning about the different ways you can determine whether or not a management team has integrity and whether or not their values are aligned with yours. It's just important to get a wide array of views on this topic so that you're as well equipped when you come to making your investments, so that you're not narrow-minded in this area and that you're not just sticking to one person's opinion. But the areas that I look at are pretty common areas that a lot of investors look at in order to determine whether or not a management team has integrity. The very first one is whether or not the founders are still in power in the company, whether they're still directors, or even better, whether they're the chairman and the CEO. So the reason that I look for founders to be still in power is basically because the founders are the people who originally came up with the idea and got it off the ground. They're the people with the vision for where the company is going, and it's very likely that they are going to be very in love with the business that they're running because it's their baby. They created it. So if the founders are still in power, it means that they're going to really, really care about where that company goes, or it's likely that they'll really care where that company goes. You can think of someone like Elon Musk, who fought tooth and nail in order to keep Tesla alive back in 2013, I think it was, when they nearly went bankrupt. There's been CEOs, when the CEO is the founder, it just means that they're going to actually care where the business goes. And they're not just there to get their paycheck. They're not just a CEO who just likes to come in and get a $500,000 salary and doesn't really give a damn where the company goes. Maybe obviously all CEOs will strive to create great businesses and to improve businesses because that's what they're good at. They're good at creating and growing businesses, really, really large corporations. However, if you have the founders in power there, it just means you've got there's a little bit more incentive for them to want to grow the business and see it succeed. And that's something that I like to look for. And if we're thinking about the companies that we've got on our list, so what do we have left? We have Apple, Google, and Stamps.com. So Apple, the founders are definitely not still in power, unfortunately. Of course, Steve Jobs passed away back in 2011. And Steve Wozniak, I'm not actually too sure what happened with Steve Wozniak, the other founder, or the person who started it with Steve Jobs. But if we go to Google, the 2 CEOs or the 2 founders actually are still very much in power. And we can find this out by just going on Google. And if we just go on the Google Wikipedia page, we can find out straight away that the 2 founders were Larry Page and Sergey Brin. And they are still the CEO, or they're not the CEO of Google, but they're the CEO of Alphabet. So if you don't know how Google's structure works, basically the very top of the structure, the entire business is called Alphabet. And then under Alphabet, there is the Google, which is the main component of their business, and then there's their other bets section. So Google is actually not, it was CEO'd by Larry Page, but now it's not. It's by Sundar Pichai. And now Larry Page is the CEO of Alphabet, so the entire business. And regardless of whether they're the CEO of Google or Alphabet or one section of the business, maybe it's YouTube, as long as they're still in power and making decisions in the business, that's a really good sign. And clearly that's the case for Google. So that brings us to Stamps, which is the last one. And as we can see, the three founders are right here. But from what I can read here, none of them have senior positions in the company anymore. So that's a little bit disappointing to see. But again, it's not something that it's not a requirement for me. It's not like I'm not going to invest in businesses that the founders are not in power, especially because I'm particularly looking for businesses that are probably 20 or more years old, which means that it's very unlikely that the founders are still in power. I'm actually very lucky that Thor Industries, one of the businesses that I'm investing in, the CEO the founder from 35 years ago is still, I believe he's still the CEO. At least he's on the board of directors, which is incredible. That's an amazing 35 years at a company that you founded is very impressive. But it's not something that you see all the time. So that gets the tick for Google, which makes Google look a little bit better than Apple and Stamps at this point. But again, as I said, it's not vital. So the second thing I look for is I look at the letters to the shareholders. And basically, if you don't know, every year they come out, a company comes out with their annual report, and at the very top of the annual report, there will be a letter to the shareholders that's either written by the chairman or the CEO or the CFO. It'll be written by someone high up in the business, usually right at the top. It's usually the CEO. And basically, that letter will outline how the year went and how the CEO saw the year go. They might talk about some of the problems that the company has faced during that time, and they might talk about where the company's going in the future and what prospects the CEO sees for the next couple of years. And the reason that these letters are such a good thing to read is because it gives you a good tell on what the CEO is like, whether he's just pitching you. So sometimes these letters will sound really pitchy, like they're just trying to get you to invest in their company. They're just all sunshine and rainbows, and then they just neglect to talk about anything negative that happened in the company or anything negative that might be on the horizon. And then you'll get CEOs on the complete opposite side, which want to be completely transparent, like Warren Buffett in his letters. He'll talk explicitly about the negatives that have happened to Berkshire Hathaway throughout the year and how he's combating them. And that kind of transparency is exactly what you want as a shareholder, because you want to know that the management team is being honest with you so that you know what's going on at all times. And that really plays into the integrity of a management team. So this is a very subjective one. It's just going to be you reading through the letters and making a decision for yourself whether or not you believe the CEO is being honest and being transparent. What I like to do is I like to look through the annual reports for the past maybe 10 years, and I'll see what the results for the company were that year, whether they were worse than the year before, and I'll see if any of that is mentioned in the letters. So, for example, I looked through all of Thor Industries' letters to the shareholders, and during the recession, when their earnings were hit dramatically, the CEO was very, very transparent about it. He said that this was the worst year in the company's history. However, they did the best that they could in order to keep the company profitable, which is incredible for a company like Thor Industries, such a cyclical business, in order to remain profitable for a 35-year period. And basically, I just felt as though the way he spoke to the shareholders in that letter was very, very transparent and very honest, and not trying to hide anything and not trying to fool anyone into believing that the company's doing well when it's clearly not. Talking about what they're doing to fix things, and reading those letters from 2008, 9, 10, on, and just seeing the progression of what the CEO was saying, and then the next year that coming true and saying, yep, we succeeded in this area, such as back in 2016, they said that they were going to retire the debt taken on when they did the Jayco acquisition. They said they were going to retire that in 3 years, and if you read the letters to the shareholders after that, they said, yep, we're on track to do it, and then they did it 1 year earlier than they expected. So I just like to see a kind of transparency there. And basically, if you want to find these letters to the shareholders, you basically just go onto any company website, just search the company and search investor relations, go on there, and you'll be able to find it amongst the annual reports and the quarterly reports. It will be in there. And it's usually at the top of the annual report that the company publishes, not the one that they submit to the SEC, but they'll come out with one that looks a little bit nicer. So you'll see this one here is just the SEC report. It's just black and white. It doesn't look nice, but they'll also come out with one that has like a front page and everything. It's clearly for investors. And then you'll scroll down, and at the very top there will be the letter to the shareholders. But the next thing that I like to do is I like to listen to the conference calls. Now, again, same as the letters to the shareholders at the end of the year, and actually often at the end of each quarter for a company. When they announce their earnings, they will also have what's called a conference call, where basically the CEO or the CFO will talk about the results for the quarter or the year, and then they'll usually take questions from shareholders. And those are really interesting because it's a way for you to hear how the CEO responds to questions sort of off the cuff, sort of just random questions that shareholders have for the company. It's not scripted or anything. They just have to answer the question live on the call. So it's very interesting, and you get a nice perspective of whether or not the CEO or the CFO is dodging the question, whether they're just sort of waffling on about some rubbish, or whether they're getting to the point and answering the question and being like, you know what, you're right, we struggled in that area this year, but this is what we're doing to fix it. That's what you want to hear. So that's another way that you can assess the management's integrity. The third one here is the shares held by insiders. So basically then what I like to do is I like to see how much shares are held by the CEO and the other senior management team. So sometimes you can go over to Yahoo Finance and you can just find the shares held by insiders listed here, but sometimes it's not there. Sometimes it'll just say the percentage, which for Google is 5%, and it's 70% held by institutions. But if it's not there, what you can do is you can just do a Google search, and you can just search such as Google Insider Shareholders, and here we can see the top 5 Google shareholders, which are Larry Page, so the founder, Sergey Brin, the other founder. Whoops. So they own 20 million shares at $1,000 a share. Sergey owns, I think he also owns 20 million. Yeah, he owns 19.3 million shares. Eric Schmidt, how much does he have? He has a significant amount, not as much as the others, but he still has hundreds of thousands of shares. The CEO of Google has over 100,000 shares. So you can see that the key players in the company's management team own a lot of stock. And I want to point out that this is not intrinsically a good thing. So basically, it's good because it means that if the stock price, their personal wealth is aligned with the stock price. So if the stock does well, it means that their personal wealth grows. And you can think of that as a good thing because it means that they've got an incentive to make the business grow, not just an incentive to get their paycheck, because they'll make a hell of a lot more if they make the stock go up. But the part that's negative about insiders holding a lot of stock is that it means that they have power in the business. And that means that if they're causing trouble, if they're not doing things that are that are aligned with the values of the shareholders, then it can be difficult to get them out because they have a lot of shares, they have a lot of voting power, and they have a lot of influence in the business. So that can also be a negative thing. But I personally like to see that the CEO has a personal wealth interest in the company. And that's what we see with Google, which is a really good sign. And that's just another way that you can assess the management's integrity. And the last one I've got here, I don't look at too closely, but it is another one that I look at, and that is insider trading. So you can actually have a look and see what trades the insiders are making. So what trades are the CEO making? Are they selling? Are they buying their own stock? So you can have a look at that, and you can determine for yourself whether or not you think that's a negative thing. If there's a lot of insider selling, it could be an indication that either something negative about the company is coming up, or they believe that the stock is overvalued. So it's often a good thing to see that insiders are buying, because it obviously means that they think the stock is undervalued, or they know something about an event that's coming up in the future that is going to make the stock go up. Because while insider trading is illegal, we know that it happens, and we've looked at many years of data, and we can see that leading up to events, there is a significant increase in insider trading leading up to an event, and that's because their information is not, it gets leaked. It's not going to be completely private. There's going to be a number of different people inside the business that know about things that are happening, so it is interesting to see what kind of trades they're making. So you can see this on Yahoo Finance, and again, I'm not 100% sure that this would have every single transaction in here, but you can see every single transaction on the SEC website. So you can just go on there and look through the data, but it's a lot more complicated to look through there, so I just like to look on the Yahoo Finance, and you can see here that there's a number of things happening. So there's sale at 1,028, sale at 1,028, 1,028. It looks like there's been quite a lot of selling, which is interesting. And you can actually see here, so purchases in the last 6 months was 265,000 shares, and sales was 100,000 shares. So they've actually been buying more than they've been selling, which is not unusual for very rich individuals who are running these corporations. That's not really unusual to see that they have more money that they need to deploy into stocks. But it's definitely a good sign that there's not more selling than purchasing. So those are the 5 things that I like to look at to assess the management's integrity. Again, remember, this is very subjective, so make sure you do your research and find out what ways are the best ways to assess this. And this is basically just up to you as a person. Do you trust the management team? What feeling are you getting about the management team? We've already looked at their skill, how their work has what their work has been realized as in the numbers. So what kind of returns they're getting, and how they're managing their debt, and what kind of debt levels they're keeping at the company. We've looked at that. Now we're just looking at the integrity. Do you like the management team, and do you trust them? And these are some of the ways that you can do it. So I thought I would talk about those for this video. In the next video, we will continue our research, and we may be getting very close to investing in some companies. I think we will probably add some to the portfolio very soon, but we'll certainly be doing a portfolio update in the next couple of weeks, talking about how the holdings have been going and what's been happening in recent times. But thank you guys for watching this episode. I hope you enjoyed this one, and if you did, please leave a like and hit subscribe if you want to see more new episodes out every single week. But for now, I'll see you in the next one.